Hey friends, Dhruv here. So let's be real. In a market like this, everyone is having losses. And people usually avoid talking about it because you see all these social media posts promoting people's profits and their trading gains, and this really affects your perception of how you see the world. Remember, grass may not always be greener on the other side. And in markets these days, it's red everywhere. I guess we should all accept the fact as it is, because if we scan through the history, we can safely conclude that scenarios like this one are quite common in the investment cycles. Let's take a moment to talk about millennials. So they are aged between 26 and 41 now, and they've witnessed the 2008 financial crisis. And after that, most of the young folks were reluctant to start investing. And even if they did, it was too conservative. But if you look at the scenario today, there's a huge wave of investors. And I guess one major factor was the pandemic and the subsequent lockdowns. So a large amount of young investors who had piled up even small amounts of money now came into the markets. And the surprising part is, even though the markets are down today, there are no signs of youngsters backing off. And I guess it's really important because by getting into the markets early, investors are capitalizing on a really important tool, and that is time. And there's a quote about it too. So it goes like, the greatest money making asset a person can ever possess is time. And obviously when you combine time with compound interest, all you have is wealth. But let's take a step back and talk about today's scenario. So although the financial markets attempted a bounce back like last week, they're largely in the midst of an extended sell-off. And all around the world, it has punished some of the biggest names in stocks. You can talk about Apple, Facebook, Tesla, or even Indian companies. Everywhere you see only losses. And I guess many of the investors, especially those saving for important stuff like retirement, may be wondering what to do in such a turbulent market. Let me give you a short answer, and this is what the complete video is about. If you have a lot of time, just don't worry about it. But wait, don't stop watching. Do hit the like, share and subscribe button because it helps me out tremendously with the YouTube algorithm. And if you have already done that, thank you so much, and here's a hug from me. Yeah, now let's continue. Okay, so I'm gonna say it out loud straight. Just don't watch the markets. And that is what even the experts say. Talking about the oracle of Ohama, obviously Warren Buffett, that's what he said in 2016 too. And at that time, the American markets had a lot of volatility and people were panicking all around. But those who had patience and stopped looking at markets made a lot of returns. So obviously, people who are gonna buy stocks of good companies will see the results in like 10, 20 or even 30 years. But those returns will be huge. But if you keep trying to sell or buy the stocks, and maybe you try to time the markets, it won't work. Obviously it won't work. Well, unless you are God or something. Because the thing is, real wealth is made by investing in good companies for over a long period of time. And that's exactly what people should do with their investments. Actually, it's really simple. If you're gonna invest in some company, obviously you need to trust that company. If you're investing for short term or trading, then I can understand. But if you don't trust the company, what's even the point of investing in it? But if you wanna stay on a safer side, just buy index funds like Nifty 50, or if you're in some other country like US, maybe buy S&P 500. And you'll obviously get huge blue chip companies, and mostly your investments would be safe because it's all diversified. And there was an investor called Jack Bogle, and he founded Vanguard. It's really famous in US. It's like the first index fund or something. And he said the same thing in an interview. Your emotions would totally defeat you. And I think all this is common sense, but the human brain doesn't have enough control to see the right things. And that's exactly what's gonna happen if you try to sell off your holdings to prevent losses. So just stay on the course and don't let the changes in markets, even the big ones like maybe 2008 or maybe somewhat today, change your mind. And never be in or out of the market simultaneously. And just make sure to keep investing regularly and don't try to sell off your holdings, especially if it's in an index fund. Because for most investors, trying to react to the market is most likely to backfire. I have done that mistake and millions of other people have done it too. And I keep coming back to index funds again and again because if you've got a diversified portfolio, obviously you are much safer than a single stock. I think it might be just best to ride the roller coaster and experience the ups and downs, but eventually it'll just go up. Because by selling when the markets are down, you're just derailing your long investment plans. And whatever happens, the markets are actually gonna recover. And if you miss that recovery, there's a very less chance that you're gonna hit your financial goals. So that's exactly what I said. Give it time and have patience. Just don't poke your nose again and again in your holdings. Because again, for most of the people who don't have that much financial literacy, keeping calm and having patience might be the best thing ever, unless there's a zombie attack, I guess, but mostly you're safe with blue chip stocks. And if you're talking about cryptocurrencies, I don't even want to talk. My holdings are down like 30, 40 or even 50%, and I don't care because that was just an experimentation. But yeah, I'd like to study more about it. I won't necessarily go into trading, but for long term, I don't think it's gonna work right now. But if you're really into it, just trust the stable coins. And again, if we talk about stocks or index funds, and if you're really interested, do a little bit of technical and fundamental analysis, so you can save that extra 1 to 2% in dips, and in long term it's gonna make a lot of difference. So I guess that's it, and just have patience, maybe even meditate, and I'm sure it's gonna help. Thank you so much for watching this video, and I'll see you soon.